Intuit reported a beat and a raise for fiscal Q3 and the full year guide. Q3 revenue $6.74 billion versus $6.65 consensus. EPS came in at $9.88 versus $9.37 expected. That's where it gets complicated. If Q3 beats, an EPS by about 50 cents and the full year EPS guide is a raise, how much does it matter that you're left with 7 cents less in Q4? Well, you decide. I spoke with Intuit CEO Sasan Goodarzi about the quarter. Here's how he framed up the guide itself.
We are raising our guidance for the year. We're shifting from 11 to 12% revenue guidance to 13%, and we're raising every metric, operating income and EPS. And it's really several-fold. One, our revenue is growing faster, and we're continuing to get just incredible leverage because we're a platform company, and all of our investments that we've particularly made in data and AI is allowing us to deliver more innovation for our customers and be far more effective internally. And so that's the leverage that you're seeing and why we're able to increase our guidance across all of those metrics. And specifically about your question in small business, our guide for the year was 16 to 17% growth, and we've just now raised it to 18% growth for the year, where we're very pleased just with the progress of the platform. Again, in a very uncertain macro environment, we are mission critical for those that we serve.
Yeah, and I just thought maybe I'm reading something wrong here because overall your fiscal year guide on EPS is higher, right, to $16.79 to $16.84. But it looked like the Q4 guide was short of expectations. Was that because of the outperformance in the quarter that you're now reporting? I guess I didn't have time to do the math.
Yeah, I'm not sure what the numbers are that you are looking at, but what I would say is generally folks have a hard time knowing what Q4 is going to be because they don't know what our Q3 is going to be. So now that we've delivered Q3 and we beat across all of the metrics, I think the big thing to focus on is not only did we beat across all the metrics in Q3, we also raised in Q4, and that should be really the big takeaway, which just demonstrates the strength of the platform and the company.
Now, I also spoke with Goodarzi specifically about tax season and how Intuit fared at a time when consumers have been budget conscious.
Our biggest focus right now in tax is really going after the assisted segment. These are folks that, whether it's a consumer or a small business, they go and have somebody else, do their taxes for them. And, it's about a $30 billion TAM. And, we see it as a very manual, very disaggregated, and very high-priced market. And so that's really our singular focus. And so when you look back at the tax season, TurboTax Live is the platform we really leverage to help customers get their taxes done, whether a consumer or small business virtually. That's now $1.4 billion in size. It grew 17%, and it's actually now 30% of all of TurboTax. And eventually, it's going to be the largest driver of growth.
And I just want to clarify what that is for people who aren't familiar. Yes, TurboTax, the software itself, steps people through the process, but you can get a live tax professional to actually do the taxes with you. And you're saying it's more cost effective than the traditional means of getting a person.
Yeah, that's exactly right. And in fact, just to finish the thought, and then I'll answer your question very directly, our share of paying customers actually increased this year. Total IRS returns grew about 1%, but the assisted segment was sort of flat. And we saw significant growth. And really the reason is folks want to have confidence in their taxes, but they also want to be treated fairly in terms of the price.
Finally, I asked about how he's allocating resources. Intuit is stepping up investment in Gen AI, shifting engineering resources and spending less in customer service and some content creation.
I'll give you 3 examples, actually, the areas that we're looking at. One is, although we're going to be adding to engineering, our engineers are actually far more productive now with all of the AI capabilities that they are using. So we'll be shifting engineering off of certain work where AI is now going to do the work to more important work. Another area is our investments that we've made with AI across our customer success operations, we're able to have AI do a lot more of the work and reduce the manual entry for our customer success folks. And so therefore, we'll be able to do more with less investments. And then the other I would just say is content generation. We're leveraging a lot of our AI capabilities to generate content internally that others would have to manually write. And so those are areas where, based on investments, we're going to be more efficient, more productive, and move the dollars